Thank you so much for joining us here on a Tuesday, the first trading day of 2018. I'm Marlon Bowling with you, your tour guide to your ag commodity trade today. And let's see what the grain trade is doing right now. We opened up the corn market a couple of cents higher as it stands right now in Chicago. We'll take a look at the futures here. We're 2 1/4 higher on the March at 353. That's on the high of the day so far. July up 2 1/4. And if we look at the soybean trade right now, you have January 7 1/4 higher at 959. That's a penny off the high of the day. And July now up 7 1/2 at 990 3/4. That's a penny from its high of the day. We're off our lows by about a nickel. And in Chicago wheat, March now 6 3/4 higher at 433 3/4. That's on the high of the day. July up 6 at 459 1/4. Just one tick off of its daily high. Kansas City wheat, we have March now trading at 434 3/4. That's on the high of the day, and we're now up 7 1/2 cents. July up 6 1/2 at 464 3/4. That's on the high of the day. Minneapolis wheat, let's flip over there and look at spring wheat. We have March now a 1/2 cent higher at 619 3/4, but July is down a penny and a quarter at 629 1/4. And looking at the cotton market right now on the March contract, down 5 points at 78.58 per pound. Let's go right to the trading floor in Chicago. We have Todd Bubba Horwitz standing by. He is with BubbaTrading.com. Todd, you and I spoke before we put a bow on 2017 and shoved it out the door. And you were saying at the time that you were interested in being a buyer. At the time, you were explaining your thought process for that. And at this point, if you followed through with what you were talking about last year, that actually doesn't look too bad this morning, does it?
Good morning and Happy New Year. And yes, the new year is starting out very nicely, actually. We are buyers. We were buyers. And actually, we would still be buyers of dips. I think this is just the beginning of the move higher. Now, again, there's going to be some pain, some sell-offs here and there. But I think the overall space sets up really well as there's going to be some new money looking to flow into different areas. And I do think that although equities are higher today, they're going to be start to see some pressure there as well. So I think there will be a lot of new money starting to flow into corn and wheat. And if soybeans can break out above, 985, 990, I think money will come there as well. I'm still very concerned about the soybean market because they don't seem to have the same strength or the same underlying base that corn and wheat have. But I do like them, and I am looking for them to go higher.
Well, we talked about it earlier in the broadcast, the fact that we could have some book squaring before we got into the end of 2017. And everybody wondered if they were just going to put positions back on or jump back into the market here in the first of 2018. Today, is this going to be more than a one-day wonder? Do you think they'll follow through?
Oh, I think there'll be a lot of follow-through, Marlon. I think, again, we might have a little bit of a sell-off here and there, but I think that we're going to see follow-through. I think this is, as we looked at last year's action, we saw the continued effort to try to push them lower. And although they tortured us and took us down a penny, 2, 3 cents at a time, they could never really take them down. And I think this is a spring-back rally, which I think is probably starting off with a little bit of short covering, which could build some momentum. And then we would look to be, of course, I think the bottoms are in corn and wheat. So I'm looking to certainly be a buyer of any sell-off or any break in those markets. And of course, again, I'm still very concerned soybeans, but I do think this is just the beginning, not just putting their positions back on and a one-day wonder.
Oh, okay. Very interesting stuff. Well, if you don't mind, I'll bring you back here in just a little bit, and you and I will talk about the opening that we're seeing here in the livestock trade as well. Cattle going one way, hogs kind of going the other this morning, so we'll sort that all out. Our guest is Todd Bubba Horwitz. He's with BubbaTrading.com in Chicago, right there at the trading floor. As we get it rolling in 2018, we'll have more when we come back. The dollar index on the futures are still trading 190 points lower. We're talking with Todd Bubba Horwitz of BubbaTrading.com in Chicago right now. And Todd, is that very significant in your perceptions of what that might mean for ag trade here?
No, it's not at all. I think that, again, I think the dollar has become more of the manipulated currency against the others as the major central banks try to figure out what to do with it. I don't believe that it has anything to do with the ag markets at the moment. I think that the dollar is right now just under the guise of trying to keep interest rates down. And right now, if they let the dollar rise, interest rates have to rise with it. It's an automatic, it's a backdoor interest rate hike, and they don't want them to go up. So they're going to keep the pressure on the dollar right now. But I don't think it has any effect right now to the ag products. I think the ag products are going up on their own because they were at great levels that they looked like they should be going up.
Cattle open sharply higher this morning. We've had them trading over $1 higher. Let's take a look at our live cattle board and catch the latest quotes for everyone. We have February now up $1.27. Last trade 122.82 per hundredweight. We have the April contract up $1.28 at 123.70 per hundred. That's about 25 cents off our high of the day. Right now we have June up $1.23 and it's trading at 114.88, just a dime off of the pace of the high here today in that contract. Moving on to the feeder cattle trade. Here we have over $2 gains all across the board. We have January exactly $2 higher at 148 even per hundredweight, and the March contract up $2.52 now at 145.20. That's within a dime of its high of the day. We're well off our earlier low by about $1.70 now, and we have April $2.42 higher at 145.50. Is this what you foresaw coming into the New Year's Day holiday?
Yeah, I saw higher prices. Now, I think they might be up just a little faster than I'd like them to be, but I think that fats look great, and I think you want to buy every dip that comes down, that we pull back to. I mean, certainly, if we get back to 119 or 120, certainly want to step in, at least for the next couple of months. We start to go into that backwardation formation starting in June, so a little bit of concern there, but for now, I think we go higher, and feeders have had a heck of a bounce. Now they're right at the original target we set, which was 140 on the way down. I would expect to see a little bit of resistance here, but I'd certainly look to be a buyer on a pullback to about 145. I believe that, again, I believe cattle is going to be very solid this year and go higher. I'm very friendly to the entire agricultural space. And I think the hogs are 72 is going to be major resistance, which I'm not at all surprised. I'm looking for them to pull back to around 66, in which I want to be a buyer. So basically, I want to own the entire complex right now.
Right now, February lean hogs are quoted at $71. That would be down 78 cents on the day. The April contract down 60 at 75.05. The May contract now 2 cents higher at 80.02. Now, you said you were not necessarily in the camp that you would want to chase the cattle market higher. Where are we technically then on the lean hogs relative to where you think the cattle might go?
Well, I think hogs are, I think 72 for February is going to be tough to get through. I think we failed there a number of times, and I think we need a bigger pullback once again. You got a little bit too excited, so I think if we can get a little bit of a sell-off, and I'm looking at 66 as the level I'd like to see, I would be more than happy to step in. Of course, pretty soon we're going to have to rotate into April, but I think that would equate to about 70 in April. So somewhere in those neighborhoods, that's where I want to be a buyer. I'm certainly not a seller here. I'm looking for a spot to step in and buy, and I believe there's a pullback coming before we get it.
Okay, any thoughts on, well, we got about 30 seconds here. Any thought on this crude oil market here?
Yeah, I think crude's going much lower. I think what we're seeing right here is what they call backwardation, as we've seen in our products as well. You've got the fear of the Mideast. The crude in Feb is trading at $60. The crude in June is trading at 57. To me, it's all fear right now. As soon as this fear subsides, they get an answer. Crude's going to fall pretty hard.
Okay, well, good to visit with you again, and you're my first analyst from the CME trading floor here in 2018, so congrats, or my sympathy for that, and we look forward to talking with you moving ahead here, all right?
Congrats is great, and Happy New Year. Thanks, Ron.
All right, thanks a bunch. Todd, Bubba Horwitz at BubbaTrading.com in Chicago. Right from the source. There you go.
That's right. Thank you very much.